Started, and we'll get rolling with roll call here first. Alder Brian Johnson.
Here.
Eli Hicks.
Here.
Matt Schuler is here, and we're still awaiting Vice Chair Ace Champion and Kathy Hinkfus, and hopefully they will join us here in process as we get going. So let's just move on to the agenda today, and I would look for a motion to approve the agenda for the April 8th meeting of the Community Development Block Grant Revolving Loan Committee.
Move to approve.
Motion by Brian. Do I have a second? I'll make that motion. And Eli, I don't know if you know, but you're on mute right now. So we have a motion by Alder Johnson and a second by myself. All those in favor say aye.
Aye.
Aye. Is there anybody opposed? Can't be. I heard 3 ayes. Okay. We'll move to our next, keeping it simple so far, our approval of minutes from the March 16th meeting of the Community Development Block Grant Revolving Loan Committee. Do we have a motion to approve the minutes?
So moved.
Motion from Alder Johnson. Do we have a second?
Second.
We have a second from Eli Hicks. All those in favor say aye.
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 Anybody opposed? Nope, nobody opposed. So we'll move on then to regular, just first say Wednesday. Hey, really 2 really interesting projects you have brought to the table today. So really excited to dive into these. So let's get to our first, which is a consideration with possible action on a request by 30K FT LLC doing business as Gentle Vet Animal Hospital for a loan in the amount of $150,000 from the Community Development Revolving Loan Fund program. And Wendy, why don't I let you take over from there?
Sure, as you'll see, yeah, thank you everybody for coming in today, and I'd like to introduce you to Dan Gray. He's on the phone, and his lender is Turchin. So this is the parties that we're working with this morning on this particular project. So originally started back in the 70s, General Vet Hospital was the Brown County Veterinary Hospital. But in July 19th, Dan and Martha Gray took over General Vet Animal Hospital as the 3rd owners in the history in Green Bay. They currently employ 20 people, and they also serve the Bay Beach Wildlife Sanctuary and New Zoo. So they're community engaged there. You know, since 2019, they've seen significant growth, as we all have seen with the businesses through the pandemic. Some have really thrived, and this is one of them. They are trying to meet the rapidly growing demand and need a larger location. They currently are turning people away for services. So they are looking at purchasing a property located at 2560 University Avenue and building a new facility. You've had a chance to take a little peek at some of the renderings that they have furnished. Obviously, those are subject to change, but it gives you an idea of where things are going and what kind of things they would like to do with the funds that we are working with. So right now they are purchasing 2 acres of land to build the new facility. They would like to use our city funds in the help of that, securing the property. They already have put a down payment in. As you know, construction costs are going where they are. They're on the high range right now, and to contain things. But anyway, this $150,000 for revolving loan funds would be used for the property acquisition. Right now, they have a land contract on it with the current owners, but once the loans come together, they'll be paying that land contract off with city funds and with some funds from Johnson Bank, in addition to getting the construction started. We did show you a little bit about the sources and uses. So it would be the revolving loan fund at 150, the borrower's equity, they're in at least at 210,000 right now. The private lender is 3,240,000 for a total project of about 3,600,000. So anyway, I guess that gives you the background of what they're doing and what the funds would be used for. They would need to create some jobs. So they're anticipating on creating more jobs than needed, but they would need to do a minimum of 5 positions. 3 of those would need to be low to moderate income. It would be a 4% interest rate. They are asking for a little longer than our typical guidelines. We usually have 15 years on components, but they've asked to match their SBA and Johnson Bank profile and having a 25-year amortization on that. And so that would be something that I'd like to have the committee consider. I think that's about most of the highlights of this. And if you have additional questions, of course, let me know.
And what I would suggest coming out of the gate, unless anybody else has questions to Wendy, is that we open up the floor to let Dan and anyone else who's here, but I'm assuming it's just Dan, for Gentle Vet Animal Hospital, tell us a little bit about, where they currently are, where exactly they're moving to, and just tell us a little bit about the business and what they're trying to accomplish. And so with that, I would take a motion to open the floor.
Open the floor to hear from interested parties.
I'll second that. All those in favor say aye.
Aye.
Aye. Anybody opposed? Nope. The floor is open, and Dan, and would love to have you be able to tell us a little bit about Gentle Vet Animal Hospital. I think you're on University now and looking to move a little bit further to the east, and would love to have you tell us about it.
Thank you for the opportunity. And I'm happy to answer any specific questions anybody has. I think Wendy summed it up really, really well already. But so we see, as she had said, we service the Bay Beach Wildlife Sanctuary and the new zoo. And as part of that, we also see a large number of exotic animals. Exotic animals in my industry is basically not things that are not dog, cats, and livestock. That is where we see our significant demand increase. There are not many veterinarians who will see those animals. So that is our highest number of turnaways throughout the day. So that is my biggest concern that leads to this project, is that we need additional people in order to serve a subset of pet owners that are not getting served right now, just due to lack of people. And unfortunately, with our current facility, we've already maxed out where we can comfortably fit more bodies into. So that's kind of what we're up against to serve the community. And with the additional space, we will get to hire a minimum of 5 more people. And in fact, that's already begun. I've got 2 doctor candidates flying in over the next month for interviews, and with every doctor is hired usually 4 support people. And as we get more folks, that usually opens up administrative positions and things that we will need. So the hiring is definitely there. When it comes to the actual facility, where we're at, where we're going, we're currently at 1476 University Avenue, right across from the Boys and Girls Club. If you're not familiar with where that is, we will be moving east. I think it's 1.5 miles or so. We'll be just east of the Festival Foods on University Avenue, just below where the old packing plant used to be. We're kind of down the hill from there. And so that was specifically chosen because it has enough space for us, obviously, but also when it comes to the demographic studies we ran with the clients that we serve in the area, that specifically was to continue to serve people who expect us to be there for them. So it was really a perfect fit, remaining inside of Green Bay, remaining close to the clients that we serve, and also enough room for expansion. So that kind of sums up the very, very high level overview of the project. I'm perfectly happy to answer any specific questions you have.
And Wendy, a quick question for you on that piece of property. Is that piece of property currently owned by the RDA, or is that in the same hands as the developer who's doing all of the residential or apartment multifamily on the hill?
Little different location. So very close to proximity to both of those projects. which is kind of neat that all this activity is happening. Sometimes that's a good thing for a neighborhood when there's multiple things happening at one time. But they are actually on University Avenue, and their previous property owner was Howard Frankenthal. So that it's a little different piece of property, but very near.
But I mean, where they're moving to?
Right, where their new location is.
Yeah, I was thinking that was part of the same parcel. And ownership, it's not.
Pretty close.
Okay, okay.
Is that accurate, Dan?
So I think the confusion maybe, I think that all used to be the same parcel, but
Okay.
what we acquired was a 2.3 acre piece that was different from RDA, that was its own separate entity. It's not connected with the project above the hill, and it's not connected with the previous gas station across the little lane. So,
Okay.
Chair, I would like to mention one other item that I missed in the summary, that they are asking for 12 months interest only during the construction phase of their project until they can get a little further down the road and be into their new facility, and then make the full payments.
Okay. And Dan, my understanding also is right. You are, while you bought the business in 2019, you were working in the business for some pretty significant amount of time prior to that. Is that correct?
that's correct. We arrived in Green Bay and started working for, at that time, Brown County Veterinary Hospital in 2006.
Okay.
So
So you've been in business since 2006, but are the owner since 2019.
that is correct. If we're going to be
Okay.
completely technical, we were partial owners starting in 2013, but then we were 100% owners starting in 2019.
Got it. Okay.
So
So
don't want to leave any details out.
This is not a new venture for you. You're very familiar with the operation of the business, working in the business, and what the opportunities and challenges are that are in front of the business.
Yes, sir.
Got it. Okay. And just one other clarifying, when you say, hey, you're flying in a couple doctor candidates, these are veterinarians, I'm assuming that you're talking about.
Correct.
Okay. And then with each one of those that you hire, you tend to get 4 support folks that are needed to be hired to support that additional veterinarian.
That is correct.
Okay. Any other questions from Eli or from Alder Johnson?
No, I'm good at this point.
Yeah, mine are more for Wendy. So
Okay. With that, then I'd take a motion to go back to regular business.
motion to close the floor.
Motion from Brian. Do we have a second?
Second.
Second from Eli. All those in favor say aye. Aye.
Aye.
Anybody opposed? Nope. We are back to regular order of business. And Brian, did you have some questions?
Yeah, Wendy, could you just talk us through? I mean, obviously, we're looking at it looks like a request of a 25-year amortization. Can you talk us through, I guess, the balance of our loan portfolio? Do we have any others that go for that duration?
I don't think so. I have also Stephanie on that has a list of the, and we do have a list of the business or the loans in the packet, but I don't think we have any that go out 25 right now. We typically have met whatever the terms are for the primary lender, because that usually makes it a little easier. I think we did run the numbers both ways, if it would be a shorter term, an amortization time. And I did talk to Eugene a little bit about that yesterday. It would change his loan presentation to you by about $4,000 per year if we did switch it up to the 15 years. And it roughly saves, I think, about, it would, so the difference is roughly between the 15-year and the 25-year is about $300, 3 and some change. So it's 3 something per month. And then it ends up being about $4,000 per year. We kind of talked back and forth. We're trying to give them the opportunity. If they want to pay earlier, they certainly can. I think that that's the plan. Dan has called that out in his application, that he obviously would like to get things kind of wrangled in a little earlier. We know that that additional 10 years does add $35,000 worth of interest to his business plan. And so that is something to, consider. So between the $4,000 per year and then over the 10 years, it's adding, that additional cost to his project, but or his business plan. But with the extension, it matches Johnson Bank and the SBA. So this is it's a 504 is the other lender in here. So we would be in a third position. So it's going to be Johnson Bank, and we'll be working with the SBA on this one, and then the city. But it matches the amortization of the other loans.
Okay, and the look, as far as the request, I mean, obviously this is an established business. I mean, a really good business plan. I honestly have zero concerns there. When it comes to the revolving loan fund, though, historically, the way that I've looked at it is that this is money, that the reason government's involved is that you want to recycle this funding as quickly as you can, so that you can kind of help the next business. And of course, when you amortize something over 25 years, it sort of handcuffs us a little bit to be able to get those payments in and to be able to lend it back out and get that next business up off the ground. And so in particular, when I was looking at this, recognize a number of new employees. I mean, half a dozen, right? You're trying to acquire property in a new facility, and I get those upfront expenses are really substantial, and that's probably where the help is needed. I'm just wondering perhaps if there was any conversations around, maybe you kind of set it up as, let's say, a 25-year amortization, but perhaps you balloon it at 5 years or 7 years, and then maybe try to kind of shorten that term from 25 years to to 20 or 15 on the tail end of the loan. I mean, did any conversations occur of that nature?
I did not. And I know we closed the floor. We probably should open it to his lender.
I know I was thinking about that before.
Open.
I'm like, oh, I would have liked to have talked to Wendy first, but that's okay.
Yeah, that's okay.
So maybe I would make a motion to open the floor again and get some reaction from the applicant.
And I would second that motion from Alder Johnson to open the floor so we can ask a few questions. All those in favor say aye.
Aye.
Aye. Anybody opposed? Nope. Floor is back open. And so we can hear from Dan and or their lender as well.
Regarding Johnson Bank and Johnson position, I would say it would be easier from a documentation standpoint to do 15 years instead of doing a balloon payment and then reprice, because we're going to have Johnson, we're going to have SBA involved, and then we're going to have revolving loan fund involved. So any changes to documentation it's just gonna make things a little bit more complicated later down the road to reprice the loans and to redocument them. So if we're gonna move forward with it, I guess my suggestion would be trim it down from 25 years to 15 years. And then if Dan has the flexibility to prepay or pay it down, him and I are gonna work through that, and Wendy.
And Dan, what does any thoughts crossing your mind here, not trying to hamstring you along the way, but just kind of also thinking about our stewardship of the funds from the city and government perspective?
I think it's a tough position that you guys are in to have to make these decisions. That's my thoughts. It's two ways. I agree. I totally understand your position that you want to help as many businesses as possible. And my goal for my business, especially with the expansion and expenses, is to keep cash flow as nice as possible to make sure all my loan commitments are met. So of course, that's why I'm pushing for the 25 years, is every dollar of cash flow I can preserve makes everything much easier on me. But as Eugene said, when we war game out worst case scenarios, I think I can afford it. So of course, I would love to have 25 years, it'd be very helpful. And I have no intention of taking 25 years to pay. This is just, as Alderman Johnson said, trying to protect myself in the beginning when it's the most expensive. So that was a long-winded way to say I'd like 25 years, but we will accept 15.
Okay.
Dan, what if there was it, and I think a lot of folks will tell you, like, I love the compromise. And you know, for us, again, it's of course once you lend something for 25 years, you know, there's no ability for us, you know, to call that back sooner, right? And that's why that's why I like having perhaps a shorter amortization to give us a little bit of security there. But I also want to be very helpful to you. And so, you know, I'm wondering, again, recognizing that the risk and the higher expenses are typically on the front end of it. I mean, what if we did something like a 15-year amortization, which is more in alignment with where we see other things, but instead of a year of interest only, that we did 2 years of interest only? I mean, would that be useful to you? Does that change the formula much?
Eugene, what do you think about that?
I'm just not looking, I don't have an amortization spreadsheet up here. That's why I don't know.
So Brian, one of the things is we're mimicking whatever Johnson Bank has. So some of it is that we're following the primary lender, well, actually secondary. Anyway, we're involved. We're trying to follow that all of the loan, the capital stack is all in alignment with each other. So they all have Johnson Bank as well has time that they're deferred. We have also this duration that we're covering so that everything is in alignment. Then there's the complication of the SBA involved in that. So there's a couple of players and reasons why this makes sense. And maybe we have an understanding that he tried to aim for the 15-year and work with that or something. But I think Eugene can probably speak to it a little bit better. But because there's multiple sources, we're trying to align our lending to match the primary and secondary lenders.
So I don't see any major issues stretching the interest only period from 12 to 15 months. And we might end up doing it. We're anticipating that the construction could be done in 12 months period. That's why we have a 12 months interest only structure. However, because we still would have to sell the debenture, the 504 part of it, which could possibly extend the interest only period for another 3 to 4 months. And if there's any delay in supplies and construction, we might have to adjust the interest only period. So if there's a flexibility there to provide Dan with interest only period, let's say 1.5 years on a land, and then principal over the next 15 years, I think his cash flow will allow to do it. I guess I would rather do it that way than try to do balloon payment, try to reprice later after the fact. It's so hard to change the documents, especially if there's multiple parties involved.
Okay, so the 25-year amortization, that aligns with the amortization, it sounds like, of what you're doing and what the SBA is doing. That's just kind of a nice to have, but not a necessity.
Yes, it says be a maximum 25 years, and because it's brand new construction and it's a construction of the building, and we can go 25 years, correct?
Right, okay. So if we did, and again, I'm trying to, I want to obviously be as helpful as possible to your business. And Matt, I like the word you use, just being good stewards of our responsibility of this particular fund. And, and I'm thinking 25 years is a wonderful, obviously, commercial term, 20 you might more typically see. And so in my brain, I'm just wondering, again, if there's the ability for us to see this expire a little sooner. Maybe a compromise could be like a 20 years with 18 months interest only, because then Eugene, that covers kind of that, that potential period that you talked about. Would that be agreeable, acceptable?
Yeah, I don't see any issues with that. Dan?
And Dan, how about you?
I think that's very kind. Yes, that would be great.
So then what I'm hearing, and just before we close this out and go back to regular, I want to make sure we're all thinking the same thing. Then that sounds like a motion at 4% interest, 20-year amortization, 18 months interest only. Looks to me like it would work for all the parties involved. Is that correct?
Yes.
Can I ask one more question?
Sure.
Is there, so because I also want to be a good steward, this is important to me. is there a prepayment penalty? Because obviously I'd like to get your money back quicker.
No,
Absolutely
there's
not.
there is no prepayment penalty.
Okay, great, thank you.
Great. With that, then I would take a motion.
Motion to
go
close
back
the
to
floor.
regular. Great. Do we have a second?
Second.
Second. All those in favor say aye. Aye.
Aye.
We're back to regular order of business. And hey, just in the efforts of simplicity, I would make the motion then that we move forward with a $150,000 loan to 30K FT, which I'm assuming is 30,000 feet, LLC, Vet Animal Hospital, at a 4% interest rate, 20-year amortization, and 18-month interest only. Do we have a second?
Second.
Second.
All those in favor say aye.
Aye.
Aye. Anybody opposed? Nope. It looks like this motion has passed. And hey, just Dan, we're super excited. This is a really exciting project. Great to see this expanding. Love your involvement with, Bay Beach and with the new zoo and expanding within the city. And, I think we all see what's going on in the overall, pet care and veterinary market has to be growing with that. So really exciting to have you grow in the city with us.
Thank you very much. I appreciate everybody's help today.
It's great.
Congrats. Good luck.
Yeah,
I'll
we'll
be
let you go
following.
take care of some animals.
Dan and Eugene, I'll be following up after the meeting with you two. Okay. Thank you again.
Thank you.
Thank you all as well.
Great. Let's then move to, and the second order of business is still on, Wendy?
Yes.
Okay, let's move to our second consideration with possible action on a request from the Legacy Green Bay LLC for a loan in the amount of $100,000 from the Community Development Revolving Loan Fund and a second loan in the amount of $100,000 from the Economic Development Revolving Loan Fund. And Wendy, why don't we let you kick this off?
You guys got a chance to take a look at some of the pictures and beautiful renderings, and they also have information. We also have Dennis Duchette here on the line representing the Legacy Green Bay. And real quick, the development of the Legacy is a boutique all suites luxury hotel. It's going to be located 1 block from Lambeau Field. This distinctive luxury property will feature 78 studio suites, 19 classic suites, 3 grand suites, plus a retail shop, fitness studio, restaurant, 2 restaurants, 2 bars, and some functional space of around 3,500 square feet. Well, funds will be used to cover some furniture, fixtures, and expenses for the hotel. They have been in the business for a while. The Dennis Doucette will be some of the managing entity and ownership entity. Vicky Fabre is part of the ownership group. She has the Serenet glove in the area there, and that's where they're building right next to her location. Rich Ostradovec is also a minor owner. He's with Rodak. You've seen his construction company do many other beautiful projects within our community. And going to be the principal director of the hotel. He's got experience in urban and resort and independent franchise brands. Funds needed are to complete the project. There is also there's a lot of components to this. There's some PACE funding, as you can imagine, with a project that's to the with an amount of 24 million, that there's many pieces of the puzzle. I think I've spelled those out in our loan portfolio, but there'll be $6 million in TIF financing. There'll be some financing through PACE. There's also $4.7 million in the construction mortgage. So those total the 24 million. And I did have that in some of the loan packages here. They will be creating positions. They'll be creating 8 full-time or more positions, but that will be at their minimum. Those will be offered at least 51% to low to moderate income individuals to meet the requirements of this grant program. we'll be using the two programs because we'll be having some payback from some other loans that have been recently changed. Vicky being a female owned business will fit into our minority business loan program. So we'll be looking at funds from that program, and then the revolving loan fund will be the other supportive funding source. So there'll be two loans within the city between the two programs. Obviously, we're having money coming in and money coming out pretty quickly these days. So you can see how these things are all fitting together from the last program. I did include the commercial lending proposal and also the pro forma from the business plan that goes along with this project. I know Dennis can speak to the smaller details about when they are anticipating startup and breaking ground and all those things, but I know they're getting very close. Our funds, I think they've looked at every funding resource, but they also have to have, sometimes in the hospitality industry, they have to have a reserve in case an additional pandemic or something happens. And so all these funds are kind of a little exaggerated right now in what they're trying to have out, time that they could operate without anybody coming in and having safety of reserves and things like that. So anyway, the city is looking to participate. It's interesting because we participate in small projects, but this is kind of fun to see other big projects that there's still room for the city's revolving loan fund to be participatory in. So I guess that kind of summarizes most of the project. If you have additional questions, please let me know.
Yeah, just one that's kind of a procedural question, Wendy, which is, are we just here right now doing the $150,000 commitment from community development, or are we representing economic development as well?
Yeah, both of these loan programs are underneath the revolving loan fund.
They are, okay, so we're doing
So
both.
there is only one loan committee, so this is it. Yep.
Okay, got it. And as we head into this, what are we kind of thinking right now is the ask on interest rate, term, any other considerations?
It'll be a 4% interest. As far as a delay, I don't know if we've really spoken about that. They're going to be not pulling the funds until they need them because they're furnitures, fixtures, and equipment. So this is going to be a little further down the line. And so the ask will be now to make sure that they have all of their funding components in place, but they won't pull the funds until they are in need of them.
And I meant the term of the loan.
Oh, the amortization?
Yeah.
We have a 10-year term on this one.
10-year, okay.
That's our typical AM on a furnitures, fixtures, and equipment.
Okay.
I've got a question just in general. Is 4% pretty common for these? Because I see the bank has like 5.37 and 6.35 for their.
Yeah, it's a great question, Eli. And thank you for joining us. We have had 4% set up initially. We tried to have a low interest gap financing. And so that was the business profile that was set up way before my time. But anyway, and it hasn't changed all the way through the course of time. But that is always something that the committee can look at if they decide to change. But we've always had a set rate and worked with that. So it was the community rate, and it's usually been pretty competitive until, except for when it dipped down, then we didn't do a lot of loans through the pandemic time. But everybody else was kind of pulling in their horns at that time too. But now that interest rates are starting to go up, ours looks a little bit more attractive as a loan option.
Okay. And my concern, I mean, I guess my main concern is if they're looking for a loan, kind of further down the line with furniture and equipment and stuff, and rates are going to jump here a little bit more. So 4% is very generous, but that was just wanted to point that out.
Yep. You are absolutely right. Thanks for being the lender in the room, right?
And Eli, for context on that, and it's a great question because I'm sure you're sitting there going, well, this is weird. We're like the last lender in the stack, and we're like the most attractive financing option. And you're right. It's a great question. And the context there is about the city's objective on this as well is less about interest rate spread and more about projects moving forward and job creation. And so we want to always be really diligent about, hey, making sure we're not lending into a situation where, as best we can tell, right, we're creating risk on the principal, because it's a revolving loan fund, right? And it comes back to us so that we can lend out to other projects. But interest rate spread has been very little of our objective along the way. Just for
I also
context.
wanted to point out to the loan committee real quick is that all these funds are not here at this time, but we have done the calculations with our finance department. And when the money, or when they'll be drawing on this, we'll have had payback, we'll have had these funds returned. So we don't see any issues with any of that. And so Stephanie Spencer and myself did calculations and work with them on that.
Great. Are there any other further questions? Otherwise, I would move towards going into open session, allowing Dennis to tell us a little bit about the project.
Yep, I would move to open the floor to hear from interested parties.
And I'd second that motion. All those in favor say aye.
Aye.
Anybody opposed? Nope. Let's open the floor. And, Dennis, would love to have you tell us a little bit of, and, also as you head into it, a little bit of commentary on, hey, with this $250,000, we're a pretty small part of the capital stack. And, do you really need us involved? And so would love to hear a little commentary on that as well.
Well, first and foremost, I appreciate the low interest rate. We had originally had a CDI grant in our capital stack when we had addressed this project with Kevin Bonk. And then the pandemic hit and everything went, haywire, and we've been on pause for quite a long time. And when we came back to the project, this was a gap for us. And believe me, I have left no stone unturned. I think we've done a great job as an ownership group. We've raised close to $6 million equity to get this thing done, but that's all we can raise right now. And we don't want to delay the project getting underway. Our plan is to break ground in May and open in July 2023. We don't want to miss the July-August period. It's very active in that area, in the Legends District area and the Stadium District. And of course, we don't want to miss the season, naturally, the football season. But we're excited about the project. The funds, as Wendy said, we would not be asking for them right up front. We would like consideration for those funds being used in the fall this year towards FF&E deposits, but we can talk about that. We're somewhat flexible in that regard. But we think that the hotel is going to serve the city proud. This is going to be a legitimate luxury property, but we've got a business model that allows us to compete with select service hotels during the off season. I mean, during the season in the summer, everyone does well, but during the January through April period, it's a little sluggish. And our business model calls for rates that will be, comparable to the Hilton Garden Inn. So, and we think our product is going to be is going to far exceed that naturally. This is the 7th hotel I will have opened. So I've got a lot of background here as far as opening, and this one is dear to my heart. My Green Bay, I bought a lot in Thornberry Creek. I'm building a house. I'm going to be all over this property. I have more passion for this than any hotel I've opened to date, and I think that says a lot. I've opened some nice hotels, but I'm here to answer some questions too from the group. If anybody has any questions that I can respond to.
Any questions?
Just a couple. Dennis, thanks for being here today. Could you just speak a little bit about when we're looking at, I guess, the capital stack that you've assembled, we look at appraised value. Are your construction costs, do you know where those are coming in relative to your appraised value and how that relates to your capital stack?
Yeah, we're in pretty good shape there. Matter of fact, we're meeting with on Monday just to finalize the construction budget. Rich is very experienced in that region, and he's feeling very good about the project. We intend to raise additional capital as a safety net, but right now we've made all ends meet. This $250,000 total loan from the city will close our gap. The senior lender is satisfied with the construction budget, and the TIF lender is also satisfied with the construction budget. We've also got a contingency of $2.5 million that goes beyond the construction budget. So we're very aware of what's happened in the industry and what's happened in construction and development overall. I mean, supply chains have been impacted, and we are realizing additional expenditures for this project that we did not anticipate originally, but we've accounted for those. And I feel like we're in a very good place right now.
Okay. And then when we look at, I noticed that it indicated that you have intentions of applying for new market tax credits. Is the receipt of those tax credits a requirement for you to complete your capital stack? I couldn't quite piece that together.
It is not, and I would even make a commitment to pay this loan off early upon getting any new market tax credit. Our term with the bank, we will be refinancing after 5 years, and our intention is to pay off the city loan at that same time.
Okay, great. And you kind of read my mind on that one, so I appreciate you beating me to the punch on it. And then the last question that I had for you, looking at your occupancy rates, obviously I get the monthly report from Discover Green Bay about what occupancy rates are, and they're obviously still hitting some pandemic sluggishness there, if you will. Now we see what they are for the community, which I believe was hovering around low 50s. I think you've got low 70s as your projections. I mean, but what we don't see, of course, from Discover Green Bay are how individual hotels are performing. Could you just maybe speak to that gap a little bit?
Well, first of all, I think when you look at the Green Bay, we've got to separate the Stadium District from the rest of Green Bay, because the Stadium District, and when I say Stadium District, I'm talking about Titletown and the Legends District. The properties in that region do much better than the properties downtown. And even during the off season, which is January through April, it's fairly active there. And I've got star reports that will illustrate the activity there just in that district during that time frame. Our break even occupancy is 55%. So I think we're in a position to where if we were to have another recession, the business plan that the city has also has an economic downturn scenario, and it illustrates how we still make debt service comfortably. If we were to realize the type of downturn that we had in 2008. I think the pandemic downturn was an anomaly. I don't think anybody was expecting that, and I don't see that happening. As a matter of fact, I think what we've learned through that time frame is that if a pandemic were to come along again, I don't think the same type of restrictions would be implemented that were implemented this past year. I think it would be closer to business as usual. But all that being said, we have prepared for an economic downturn, and we do have a business model that allows us to make debt service at 55%.
Great. And I appreciate that explanation. I think it's very helpful for everyone, obviously, to kind of understand that background knowledge. So thank you, Dennis.
Dennis, a couple questions from my standpoint. You did a really nice job in the documentation that was included for this, and you gave a lot of pictures and renderings of the inside of the hotel and the finishes, and towards the back of there you've got pictures and they're reflecting preliminary designs. Can you comment a little bit on, when we look at those pictures and understand the environment you're trying to create with the legacy, how close is that to actual, or are these just kind of a little bit more of, hey, this is what it could look like, but we haven't picked out materials yet?
Not at all. These are not inspirational images. These are the actual design images. The designer that we use, Guru of Luxury, she has a renderer that does real life renderings, and what you see is what we're going to deliver. It's why I feel so. For instance, we have key money coming in from the franchise, Wyndham. We don't get that key money until we open the doors. We will deliver what we are presenting to you in those renderings. And let me say this too: while we very much value the Green Bay Packers as a component of making these hotels in the Stadium District work, but we're not building a football hotel. We're not going to be what the Lodge Kohler is, and Lodge Kohler is a very fine property. I'm not speaking illy of Lodge Kohler whatsoever, but we wanted this hotel to be more of a standalone luxury property that the city of Green Bay could be proud of, that we would attract. I mean, during football games, we'll of course have all the football, signage and amenities and such, and we will cater to that audience. But we think Green Bay needs a luxury property, a legitimate luxury property above and beyond that. And we think that this is the better location for a luxury property to thrive in, because of what the Stadium District is able to produce year round versus downtown.
Are there any other questions?
Just
for
one
Dennis?
more, Matt.
Yep.
Dennis, going back to the New Market tax credits, are you preparing
Mhm.
an application, the value of the construction costs?
Right now, we're trying to get an allocation of about 10 million in New Market tax credits. We're working with bracket partners. We've had some conversations with WIDA. They did not go after an allocation this past year, but they're planning to next year. So we've got a couple of years to still realize those. And believe me, and a 10 million allocation probably nets you about 2.5 million at
Right.
the end of the day. So it sounds like a lot, but it's not.
Right.
And that would be more of a safety buffer for us. Like I said, we've managed to close our gap. But I'm pragmatic about this too. I want this hotel to operate efficiently. The ownership does not plan on taking this to have a nice, comfortable reserve built up. The bank has approved our reserve of $870,000 when we open the doors. I think it's going to be closer to $1 million at the end of the day. We're hoping to realize some savings in some categories.
Okay. Hey, and I see in some of the documentation that there may be some relationships there with BMO. For what it's worth, I know BMO's applying for an allocation for this fall. So just keep that on your radar.
I certainly will.
Any other questions? If not, then I'd take a motion to go back to regular business.
Motion to close the floor.
Motion from Alder Johnson, a second from myself. All those in favor say aye. Aye. Anybody opposed? Great. And just a comment back to, Dennis, and please pass this on, to the rest of your partners as well. Really appreciate you've brought forward as an ownership group on this as well. The Fabries with the long-term interest that they've had, in that particular area, yourself and your background operating in hotels, the construction aspect, certainly on a project of this size and scale, gives me a great deal of comfort about the multiple angles that you have put together your ownership and operating, kind of perspective from, and that's greatly appreciated.
Oh, I appreciate that.
And with that, then I would take a motion.
Matt, I would, I guess I would make that motion. And even though I was kind of alluding at, I was alluding at kind of making a contingency in there about the New Market tax credits. I'm gonna withhold from that, and I want to explain why, because there was this desire and intent, I think, for this that CDI grant was going to come in to help complement that capital stack. And obviously that's grant based. That's not a loan, which is what this is. And so I would rather not add that contingency. And instead, as Dennis said, that, hey, we could perhaps pay that back if we do receive the New Market tax credits. I think I'd rather that they'll repay it off faster if the opportunity presents itself, recognizing that there are some other pieces that are all very fluid right now for them. And I want to see this property succeed. And I think, this is just an incredibly good project. I'm so happy to finally see a hotel in Green Bay and not a Schwabenon, that I want to be the best partner possible to make sure these. So I would approve or make a motion that we approve prove it as it was presented, which was the 4% with the 10-year amortization, 150,000 from the RLF and 10,000 from the EDRLF.
And do we have a second for that motion?
Second.
Second from Eli. All those in favor say aye.
Aye.
Anybody opposed?
Just a correction, Brian Johnson, it said 10,000 from the EDRLF.
Oh,
It's
sorry,
100,000.
100,000.
I just wanted to make sure.
Yep.
I had heart palpitations.
250,000.
Yes, sir.
Yep. Yeah. And so the motion has been approved and completely agree and just want to kind of pile on what you had said. Really excited about this property, the additional dimension it brings, both to the stadium district and the city of Green Bay, and really excited about the property, Dennis, that you and all are going to bring to the city. This is really exciting.
Well, on behalf of Vicki and Rich, my partners, we thank you very much. The city has been very supportive of this project, and we promise to make you proud.
Thank you. We can't wait to see you. All right.
Thank you, everybody.
Thank you.
Thank
Dennis,
you.
I'll be following up with you afterwards. Thank you.
That sounds fine. Thank you.
Let's go to our next item on here, which is just informational. And Wendy, is there something to deliver on the RLF loan status report?
As you probably have your report there.
Oop, can I interrupt for just
Yeah,
a
I was gonna
moment?
say this is a Stephanie item. Yeah.
Well, not only that, we still have the review
Mhm.
of the policies.
Yep. So real quick, Chair, could I suggest that we just there was one item prior to the loan report that we take a look at so I took a look at our policies with Eli coming on. I wanted to kind of take a look at the guidelines. And one of the things in the guidelines that was not called out was, and I think because this committee is a little more ad hoc, that it may not have been called out on an original formal basis, but I thought that we should add in our policies that on the first meeting of the year that we elect our officers. Typically, things change throughout the course of a year. We don't meet every month and those sorts of things. So as we have a first meeting, I would like to make a recommendation to this committee that we elect our officers at our first meeting of the year. Does that, I don't know if that needs further explanation. It kind of makes sense that we know who is our chair and who are our individuals that would help us run this meeting efficiently.
Certainly makes sense to me.
Other committees have a certain month that they get together and on that particular day and things, but I just think for this committee, we should call out when we should expect to do that so we don't get halfway through a year or all the way to the end of the year and haven't had that organized. So I'd like to just have station of who is running the meeting and whose responsibility is in charge of what.
Who is running this meeting?
The chair, you, Matt Schuler, yes.
I'm teasing you, Wendy.
Thank you.
Wendy,
Chair.
I also noticed in the packet, Wendy, that there was an item highlighted under terms. Is that a change as well?
That was something that we thought we should bring up to the committee because I don't know if we've really fully discussed terms. It was just
No. I'm talking about loan terms.
loan terms.
Is that supposed to be highlighted?
No, that was probably just my making note of what things are currently.
Okay, and the reason it caught my attention, of course, is because it says in here, the maximum loan term on real estate shall be 15 years. And we just did a 20-year loan.
Right. But it's up to the committee. They may choose those things. That's kind of just in the original guidelines when it was set up. And then what happens is a project comes in and then we take a look at that on an individual basis. But it's up to the committee. The committee does have the authority to change that if they wish to.
Okay,
If
so
that
right
was-
now, all you're looking for is a motion to amend the policies and guidelines. Just capture the CD. I'll make that motion. I move that we amend policies and procedures to add the language. The CDRLF Loan Committee will hold their election of officers at the first meeting of each year under item 2.1.
I would second that motion. All those in favor say aye.
Aye.
Aye. Anybody opposed? Nope.
Yep. And then
Motion
just a point of order, Chair.
Yes.
We skipped agenda item 1.
I'm sorry, I'm working off an agenda that I printed out, and it must be different than the agenda in the packet. And
Yeah,
you're referring to election of officers, Alder Johnson?
Correct.
Okay, got it. Yeah, I'm working off the one I've got printed out, and now I'm looking at the packet online, and there's a slight difference. So, okay, let's move in then. Why don't we go to agenda item 1?
I nominate Matt Schuler as the chair. It's punishment for skipping the item.
maybe that was a Freudian slip, Brian. We have a motion. Is there a second?
I'll second that.
Thanks, guys. All those in favor say aye.
Aye.
Aye. Anybody opposed? Nope. Oh, well, congratulations, Matt Schuler. You're now the chairman of the Community Development Block Grant Revolving Loan Committee. And we also need to elect a vice chair. And correct me if I'm wrong, Wendy, is Ace Champion, correct?
We had him and he had accepted that position earlier on. We just hadn't formalized when we would appoint those items. And so, yes.
Okay. Can we nominate someone in absentia?
I think he's already accepted that position. We just needed to add so he is our vice chair. I think we elected him earlier on at a different meeting.
Yeah, we just did that recently, but I think just to make sure that we're in compliance with the newly adopted policies and procedures manual, I would nominate Ace again as a formality, just to kind of make sure that we carry that over appropriately.
And I would second that motion. All those in favor say aye.
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 Anybody opposed? Nope. Well, Ace, you'll find this out when you get the minutes. You are now formally re-elected as the vice chair of the committee. So great. Did I miss anything else? I'm looking through the agenda.
Nope, I think we can move on to the loan report. And if Stephanie wants to give a summary, that'd be great.
All right, so those were in your packet. We do have we did receive the payoff for the one Motel 6 with Deep Pockets and Ollie. We did receive those funds back, which is what we had anticipated since we had the new loan going out. So we did receive those. Everybody, we have one loan that is delinquent. I'm currently working with them on that. They've been having some issues with the ACH payment version that they're using. So we are working through those kinks. But I believe that they're just delinquent 1 month. I did receive a payment today, in fact, from them. Otherwise, everybody else is making their payments. We're doing well. So are there any questions on the report?
Actually, Stephanie, considering the overall environment, which has just been really turbulent the last 2 years, this is actually pretty calm.
Well, we try to work with them as much as possible. Like if not everybody makes their payment on the 1st. Some people, they're like, well, I can't make that payment till the 3rd. Well, that's fine. I'll work with, I'm not such a stickler. I'm not a bank, so I get to be a little bit more lax in when I receive payments. So it's nice to be able to have that kind of flexibility to work with people to make sure that things work for them. Because I don't want to put them in a financial bind either, just because the payment might be a couple of days different than what the actual term says. So
I have a really good relationship with our lenders and so with our loans. And so I think they reach out frequently and talk to us, which helps, I think, the whole relationship in general.
Agreed. Any questions from anyone then on the loan status report?
Just one here. When I look at the balances, obviously we just pledged in these. I mean, I just want to make sure that I'm reading this properly. So when we look at the ED one, I think it had around 95-ish thousand. So we're expecting some repayments to come in that will then allow us to lend back the 100,000, which you explained, Wendy. So when we're looking at the other one, the CD one, we've got 269. We obviously just lent out 250. Are there any other, I mean, I guess when would we normally see an annual replenishment or a request, I guess, to be replenished? Does that happen in October?
does.
No, actually, that should be happening a little bit sooner than that. Krista Baton is working on her plan, and once that's finalized by HUD, hopefully September. HUD's supposed to have it done by September, but a lot of times we don't see it till October. But yes, she has $100,000 in that plan for this program. But as of right now, because the plan hasn't been approved by HUD, I didn't want to put that in there just in case something odd does happen, but we are anticipating that.
Okay, so the reason I'm asking, of course, is then the only amount that we really have left is a little bit of a balance after we pay out that 250, and then whatever comes in terms of loan repayments, which isn't a real substantial amount. Is there any intent, in the ARPA bucket, we allocated 6 million for affordable housing and small business support. Has there been any discussion at the municipal level about whether or not this particular fund could be replenished with some funding there? Because 100,000 can go in one request, and even then we're waiting quite a while before that's available. So I'm just trying to reconcile, demand for the program to funds available.
Great question. I'm going to take the first round at that one. One thing that's very helpful is when our funds are out, it's much easier to ask for funding. So now that these loans have been approved, that gives us the opportunity to now plead our case to Krista and resources that we are getting the money out and that it is active in our community and that we would like to have additional funding for that. So we don't usually talk too much about it ahead of time, but now that it has happened, now it gives us the leverage to go out and ask, say now we have it out, we're having additional, I'm working with 3 or 4 other businesses right now that are still interested. Some are low. We know that they only need like a working capital loan for 35. With us having about $20,000, $17,000 to $18,000 come in per month, I only have to wait a month or 2, and then they can get their $35,000 out for their working capital. So it is rolling forward, but it does also give us the opportunity to ask for additional funds now that our funds are depleted.
So additional funds from block grant or additional funds from ARPA? I'm just curious, I guess, where timing, right? Because my mind's going to timing and when we have funds available to start lending out again.
I think both of those options are good resources, but HUD for sure, we know that it's going to be a lot easier to ask for. It's hard to ask for them when we already have them. And so having these loans happen is a really important piece of the puzzle when she's putting her ask in. So that's an important piece here. But then I think that it is valid to ask for resources from other funding programs as well now.
Okay, thank you.
I think you have support from at least one alderman, Wendy.
I need that one. The committee vote helps. Yes.
Okay. Well, hey, then we're at about 8:40 right now, and I think we've gotten through everything. So I would take a motion to adjourn.
Good, Eli.
We have a motion and a second. All those in favor say aye.
Aye.
Aye. Great. We are adjourned. And thank you, Wendy and team. Great meeting. Nice, 2 big, nice projects and great things to see moving forward in the city.
Thank you, everyone. Have a great
Thanks,
day.
everyone.
Nice
Take
meeting you
care.
guys.